Good morning. This is lecture week 12, and I'm going to be going through the slides with you because I'm afraid you're going to be missing out on some lectures. So first of all, allow me to start with the outcomes. You should be able to explain the use of the multi-column cash journals. You need to be able to draft a cash receipts and payments journal, and you must be able to explain the advantages of having a cash receipts journal and cash payments journal. So what is the purpose of the subsidiary journals? Firstly, it's to avoid large number of transactions from cluttering the general ledger accounts. And what I mean by this is that normally in the general ledger, as the way we've done it so far, for example, in your bank account, you've had 20 things maybe that is went into the bank account, but it's actually not the way it's supposed to be done. So in your journals, like the cash receipts journals and cash payments journal, you will put in each individual transaction, and then only your totals in those journals will go to the bank account in the general ledger. So let's say, for example, in your cash receipts journal, you had 100,000, and in your cash payments journal, you had 60,000. Then only the 100 and the 60,000 will go into the bank ledger account. So you won't have a whole lot of transactions in the bank account, but rather you will have only one amount on the debit side for the receipts and one amount on the credit side for the payments. Okay, and then the second purpose of the journal is to keep record of the details of the transactions. And important thing about the subsidiary journal, which I'm referring to here, is that it only deals with cash transactions. So you'll notice the names of the journals indicates to you what it's used for. So cash receipts journal means cash that is coming into your business, money that is coming in. And cash payments journal would obviously indicate money that is going out, so payments that you are making. So there are no credit transactions which go into these journals. It's only cash receipts and cash payments. So let's speak a bit more about cash receipts journal. The first thing is the journal is used for recording the initial cash receipt. So every time you receive cash, it will go into this journal. Now previously what I've shown you guys is you would debit your bank account. Okay? And you debit in your general journal, you would debit bank. But technically, when you receive cash, it should go into a cash receipts journal and not in the general journal. Okay, but I'll get to the general journal at the end of these slides. So cash receipts journal is used for, there are three things on the slide. Cash sales, so that's when you sell things for cash or you're rendering a service for cash. Cash received from your debtors, so when your accounts receivable will pay you, that's also cash that's being received. And then income that is received. Okay, so any other income such as commission income or rent income, when you receive it, that will also affect your cash receipts journal. What you need to know is that any money that comes in will go to the cash receipts journal. That's the source documents. Which source documents relates to the cash receipts journal? So all the documents which you will draw up when you are receiving cash. First of all, a deposit slip. So when you deposit the money into the bank account, it indicates that money was received into your bank. Cash slips, meaning that when someone comes to buy things from you, you will issue them with a slip. So that is a cash slip, which will also indicate that money has been received. And the final one is receipts. Okay, so when you receive money from someone, you normally issue them with a receipt to indicate that you've received the cash. And that's another source document which we'll use and which will indicate to you that you are receiving cash. Right, sundry accounts, another important factor in your cash receipts journal. So let me explain this. In your cash receipts journal, obviously there's a specific format which you need to follow, and you have specific columns in your cash receipts journal. Now, for example, you'll always have bank account in the cash receipts journal because bank will always be affected. And then you'll have columns for the things which are more common. So for example, you'll have a column for cash sales because you know that throughout the month you'll have your sales coming in. You also maybe have a column for accounts receivable because that's another common thing where you'll receive money from your debtors. But all the other things which you'll receive money from, which doesn't occur more than once in a month, will go into a column called sundry accounts. So that is all the accounts which does not go into a specific column like debtors or debtors or cash sales. It will go into sundry. So for example, example, if you receive interest income at the end of the month, you're only receiving it once for the month. So that is the type of thing that would go into your sundry accounts column in your cash receipts journal. Right, moving on to the cash payments journal, it's obviously just the opposite of the cash receipts. So all money that is going out of your business will go to the cash payments journal. And the common example here is cash purchases of goods. So when you buy your inventory for cash, it will go into the cash payment journal. When you pay your creditors, so when you're making a payment to your accounts payable, it will go into the cash payments journal. And then any payment for expenses. So every time you pay an expense like telephone or hotel and electricity, that is all money going out of your business. Source documents that relate to the CPJ would be a check. So obviously when you pay someone, normally you write out a check or the check counterfoil. Okay, so for those of you who don't know, a check counterfoil is that part on the left side of a checkbook which remains in the checkbook. We call that a check counterfoil. That gives you more details about the payment you have made. Okay, and that is all for the cash receipts and cash payments journal. What I also want to tell you is that in the formats of the CPJ, it's exactly the same like the CRJ. You'd have a column for bank, you'd have columns for the things which are common, such as your accounts payable and your inventory. And then you'd have a column for sundry accounts for all of those other items which you maybe only pay once a month, like your expenses. And now the next question which will arise is what about the general journal? Because previously, every time you made a sale or a purchase, it would have gone to the general journal. So what we're trying to do now for this module is we're trying to separate our transactions into our subsidiary journals. So every time we receive money, it no longer goes into the general journal, it goes into the cash receipts journal. And every time you pay for something, it no longer goes into the general journal, but it goes into the cash payments journal.